Tense municipal elections on Sunday saw Prime Minister Erdogan's AKP party secure its lead. But what's next for the Turkish lira? Inan Demir, chief economist of Finansbank, is on the line now for this Monday's forecast interview. Inan, while some had expected a relief rally to pull the US dollar Turkish lira to January lows, you're forecasting an upwards lift to 220 in your one-month forecast.
Well, this forecast does not exclude the relief rally. Of course, we are going through that rally, but once that knee-jerk reaction is over, we would expect some further weakness in Turkish lira going forward. Part of this is down to global factors. We continue to expect the global liquidity conditions to tighten and global liquidity to become pricier going forward, and that could have a negative effect on current account deficit currencies like Turkey's. Part of the explanation is domestic. Of course, once the markets digest the election results, they will probably look into more detail about what the stability and the continuity means for the Turkish macroeconomic policies. And probably the market participants will be concerned with what they are going to see when they take a closer look, and that's actually a continuation of the relatively market-unfriendly policies that have been in place since June last year. I think it's fair to say that there has been a marked difference between the market-friendly policies that prevailed between 2002 and 2012 versus the relatively unfriendly policies that we see prevailing since June 2013 after the Gezi Park protests. So probably the market participants will be somewhat concerned about the continuity of the relatively market-unfriendly policies, and that would be the domestic piece of the puzzle that's going to drive Turkish lira lower once the relief rally is over.
This bullish sentiment continues into your midterm forecast of 225 for this pair. This level was last seen on the 3rd of February, shortly after central bank intervention. What are the fundamentals leading this forecast?
The most important fundamental will be Turkey's large external financing requirement and the tightening of the global liquidity conditions, the less supportive global backdrop. Turkey is in constant need of additional capital flows from abroad, both to finance its current account deficit and also to roll over its maturing debt, which is a hefty sum, of course, in 2014. As the global liquidity becomes pricier and tighter, Turkey is likely to suffer from the due pressures, and that's why we expect lira continuing to weaken after the election results are digested.
No change on your 12-month outlook, which continues to sit at 225. Are you anticipating flat trading through this period?
That is based on the expectation that the central bank will do what it had done before, i.e. it will step in to contain a currency weakness. The interbank rates in Turkey are already clearing at 12% level, which is some 200 basis points above the central bank's policy rate at 10%. So it is already clear that what Turkey needs is somewhat higher rates in the short term, and we expect that the currency depreciation will convince the central bank to deliver that additional bit of tightening to support the Turkish lira. Once we see that tightening, we would expect Turkish lira to stabilize, and that's why we see lira trading flat against US dollars in the 3-month to 12-month horizon.
Thanks, Inan. Ben Jones will be back tomorrow with an in-depth look at those election results. From me, though, it's goodbye for now.